Welcome back to Trading 360. I'm Nicole Petalides, live from the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman's with us, Chief Market Strategist, BullseyeOption.com. Great to see you both. Good morning. Alan, what are you thinking? And before I get to JD.com, what are you thinking about the markets here? A new month, a lot has come in. What are you thinking?
Well, the market's had it right, and we're moving forward. We're seeing more momentum. We saw a breakout in the NASDAQ. Obviously, that was weeks ago. It had been trading between 11,000 and 13,000, so that target's 15,000. We're almost there. Now we're seeing a secondary breakout here, a breakout in the S&P, which had been stuck between 3,800 and 4,200. That target's 4,600. So I'm looking for the markets to continue to move. The VIX is at 16. And it looks like there's just a 25% chance of another hike in June. Then we'll have some cuts once we get to the end of the year.
All right. Oh, cuts at the end of the year. All right. We will see. In the meantime, JD.com is the first name that you're focusing on here today. It's around 34.50 today. What are you watching?
Well, I'm not the guy that jumps on the running horses, okay? So we've seen a lot of tech stocks take off. So I'm looking at this as a stock that's between 35 and 65 for the last year. Now, it's on my radar for a couple of solid reasons, and we've talked about this over and over. We've seen this in Intel, we've seen this in Micron, we've seen this in a number of stocks. Bullish divergences, making new lows, but not new highs in implied volatility. The volatility used to be 80, now it's only 40. That's telling me that there's less short selling strength, and there's a gap up above at 55 and at 60. 50 is the midpoint pivot of this action for last year. So what I'm positioning with is an in-the-money option, a September 30 call trading for about $6. It's $4 in the money, and it's going to have 3 months of time for development. I'd look for the stock to snap back with a limited risk in the money option. It gives me the right to be long below the year lows.
All right, we're watching that. So he's feeling bullish, even though the trend, I saw a longer trend there, Ben, that was looking to the downside. What are you thinking?
Yeah, the longer-term trend is to the downside, but we've seen some strength here recently, and that's broken a bit of an intermediate trend. I like this one, actually, in many ways, and Alan was talking about a bit of divergence here in terms of the VIX and price. I'm seeing an interesting key reversal that played out this week, so very supportive of that bullish narrative. Speaking of, let's start with the more granular time frame, the 1-minute candles. I don't usually get this this intraday, but I did want to just start and look at the low that we posted around 31.57. You can see a very well-defined trend higher here over the last couple days, and a nice rally back up and through 34.50. So moving away from this 1-minute time frame, here you can see what I'm talking about in terms of, well, reversing a bit of a trend that's been playing out to the downside on the more intermediate, right? We're talking, well, a couple weeks ago we were up around 38, and you can see these areas of consolidation that formed at lower and lower levels. Here's that low we just looked at, 31.57. What I noticed was into Tuesday, some big selling. Wednesday, we take out Tuesday's low, but close above Tuesday's close. That's called a key reversal. Oftentimes, you look for energy in the direction of that key reversal. In this instance, the upside, we're seeing that play out. Not only did we take out 33, 33.80, two areas that were established on the way down, so tough to argue that we're still forming value at lower and lower levels. This looks more like a trend reversal off of a key area. Now, it coincides with the October last year lows, so let's see if we get some momentum here. If we do, those levels that Alan targeted, again, upper levels here come into play. All we need really is through this $50 level, and we open up a door for a retest of 68 JD. Again, a key reversal on the bigger picture here right now, trying to reverse a longer-term trend to the downside.
Yeah, and look, that's beautiful. He likes the reversal, Alan, in your favor. He likes what he's seeing with this little bit of a turnaround. Final thoughts here on JD.com, Alan.
Yeah, I started out with what I didn't think was a very strong chart, but it has my indicators lined up that you're seeing that bullish divergence, and that's usually a sign that an oversold stock can reverse itself. And again, if it just makes a modest move to that 50 midpoint, then this option is going to be in very, very good shape. So it's, again, about probability, and it's about money management. And again, modest moves produce big returns with these limited risk in the money options.
All right. So let's get to our next one, and you're looking at Petrobras. We're looking at PBR. Tell me a little bit about this one. It's at 1184 today. What are you watching?
I think the last 2 or 3 times I've come on, somehow I've had a Brazilian stock. And so it's just interesting. It's just a coincidence that these keep popping up on my radar here. Now, this is a stock that's inexpensive, 1150. It's been between 10 and 12 for 6 months. So a breakout of this range is 14. We're seeing a couple things. I'm seeing my bullish divergence that we had in December with that low. I'm also seeing leverage buying, which is another indicator I use to follow option flow for the intelligent money in there. So I'm looking to buy a January option. Yes, January. That's 7 months at a time. The $9 call, again, the low is down at the 9 level. The right to be long until third week in January. $9 call is trading for about $275. It's $250 in the money. And if the stock just gets to 14, which is that technical target, this option gains 100%.
All right. What do you think? Feeling bullish, Ben, as you look at this chart?
Nicole, I think we're going to have to agree to disagree on this one, unfortunately. We'll go 1 for 1 here, or 1 for 2 right now. I do see a bit of a bullish tendency, trend, price activity playing out on the more intraday time frame, but on the longer term, we're range bound, if anything, still exhibiting some weakness. Let's just start off with the more granular. I've got the 15-minute candles here. You can see a spike in reaction to earnings. We saw quite the bid coming into play. Ahead of that, though, it's just a couple weeks ago, we were down around below $10. Earnings brought us up and through that $12 level. I just went ahead and identified 2 areas here. Just kind of tried to stay with this bigger picture look at the run-up we've seen. I can see a couple of these, well, high conviction moves up, sideways consolidation patterns playing out on the way up, again, on the more granular. But here I'm just sort of looking at this bigger picture move up and then how we're balancing here. We'll call it around 1180. Holding above that right now opens up a door for a retest of that 1220. So this is, again, supportive of Alan's narrative there. But take a look. Let's step away. Here you can see, much like what we were just talking about in terms of JD, a very range-bound type trade in many ways, right? You got extreme 16, lower extreme around 6. Here we are, for the most part, right in the middle of that. So at a pivotal area, it could go either way at this point, not really providing a lean there. But look at this, almost the mirror image of what we just talked about on that 15-minute time frame. Here we're looking at a weekly candle chart. We're going all the way back to 2010. You can see the weakness into 2013, 2014 since sideways consolidation again. This $10 level is going to be key. 10-11 I think is important here, but I'm kind of leaning on this longer term trend here that has been to the downside until we start to see something with more significance up and through, well, that 15-20 level for me would be the first indication, but right now still weakness here. Bullish on the more intraday, bearish on the more longer term here in this instance.
I see. Okay, so look, a little more short term, Alan, might work for you. What are you thinking here, Alan, now that you're hearing Ben's commentary?
Well, I didn't hear Ben say it, but I know what he thinks. He's no, not yet. But if it breaks above 12, then I think we would get a maybe out of him. So what I do is position with an in-the-money option that's there for the breakout. Again, it's a January option, so I got 7 months for something to happen. And you have to ask yourself a question. Are you happy being long at 9 down at those stock lows? My answer from a risk-reward standpoint is yes. That option is going to cost $275. If I wanted to buy 100 shares at 9, that's $900. So it's a third of the cost of being long at the lows, and I'm in position for success. And I like the risk reward on oil. I know we keep taking out these lows, but roughly, if you look at crude oil, we've been between 70 and 90 for the last months and months and months. And at some point, there could be some sort of price pop. As we all know, crude is always looking for a catalyst.
Right, and that's the whole thing. I mean, how are you feeling about commodities overall, Alan?
Well, I think a lot of it is about our friend the dollar, and Ben and I could talk for the rest of the hour about the dollar. We've been between 100 and 105, so we're kind of at the firmness for the last few months. But the overall trend in the dollar is very much down. And with no more rate hikes, what's going to strengthen the dollar? That's the question you have to ask yourself. I think the dollar at some point is going to go down and try and test that 100 level, and that's going to be very positive for gold and very positive for commodities and very positive for crude oil.
All right. Last but not least, taking a look at PayPal. I know you like to look more at the charts and less about the stories and things. I sort of wonder how much people will be spending or shopping, but tell me a little bit about PayPal.
Ben is not going to like this chart. I will tell you that right now. He's not going to like it one bit. It's a stock between 60 and 100. Again, it's a big name tech stock, so there's a lot of things that can get a reversal on this. We're seeing the bullish buying of options and that bullish divergence. There's a gap up above at 70 and at 83. 80 is the midpoint of this action for the last year. That's also the 200-day moving average, which is kind of a traction point. So the way to play PayPal for me is an August 57.5 call, again below the lows. It's trading for 8. It's got 3 months of time for this stock to find some friends and get moving. But look at all the stocks that were so bad that nobody wanted to touch them. I can go down the list and list and list. We talked about Micron and Intel that we did, but we've talked about Amazon, we've talked about Meta, we've talked about Apple, Google. This is how you find a turn in a stock that's gotten crushed, because what happens when it does have a modest bounce in profit taking, those options gains will come very, very quickly. Again, being long from 57.5 with a limited risk option is something I'm very, very comfortable with.
All right. How are you feeling, Ben? Are you feeling comfortable here looking at PayPal, or you disagree a little?
I agree with Alan in terms of looking for a turn. I just don't agree with the fact that we've seen that yet in terms of PayPal. I've got, first and foremost, high conviction trade to the downside, and this is on the 1-hour candle chart. So you can see over the last few weeks, mostly consolidating. Alan was talking about that. I think he said the $90 or $80 level for the longer term charts, but this is a stock that's no stranger to consolidation. And in this instance, well, pretty well-defined trend to the downside, right? I just went ahead and identified the high conviction single bar here. High conviction turns into much low conviction, or less conviction, I should say, rotational sideways overlapping. But even within this pattern, you can see it repeat itself multiple times. We talk about the granular aspect associated with trading here and charting, and here you can see a prime example thereof. Okay, moving away from this intraday time frame into a bigger picture chart here. I've got the daily candles up, and this is why I still don't see a turn at this point. You can see we're going back to the highs 310. We were trading back in July, June of 2021, and you can see migration value to the downside. I've got 4 areas mapped out here. Alan, I think you called out the 80 areas, I remember. I've got my eye more on 85. I guess 80 is significant as I look at this chart, but all part of this wider range that Alan's talking about. Basically all of last year, we've been sideways, losing momentum to the downside, just not rejecting this lower level as of yet. Alan also referenced that 200-day moving average. I've got it well above here. We're talking up around 79. The 50, we're below that as well. Look, RSI still kind of contained, limited in terms of enthusiasm to the upside. So again, in this one, I'm leaning on the longer term, even the more intermediate trend to the downside across the board, multiple time frames, no rejection of these lower levels. I think Alan's a little bit out in front on this one. Could be right. Again, just a little too early for me.
And when you look at those 50-day and 200-day moving averages and where the stock is currently trading, it's just, it's tough to be bullish at this time. Thank you, Ben. Great charts today, as always. Alan Nuckman, final thoughts?
Well, my final thought is if you haven't been long in 2023, you've been wrong. And look for this momentum to continue unless acted upon by an outside force. That's what I learned in physics. So we will have to just continue to see. But let's look at the S&P. 2 full months above the 4,000 level. That's pretty powerful.
All right. Good to see you both. Thank you very, very much, Alan and Ben.
Thank you.
Alan Nuckman, bullseyeoption.com, and our own Ben Lichtenstein on those charts. Thank you both. All right, coming up next, the disruptors. George Sills is standing by. I'll take a look at NetApp. The earnings are out. They reported yesterday after the bell. He will take us through the numbers today, what he's watching. It has some up arrows here, and give us an example trade. That's next on Trading 360.